Welcome into the Safeguard Podcast. I am Outnumbered.
Matt, can we please change the subject?
At Safeguard, we want to be versatile. We want to help in every way that we can and not just in one certain area or one certain product. We want to be holistic planners for you. A good agent or advisor should provide you good information regardless of whether they sell you something.
It is so frustrating that people are penalized for making a mistake when the government doesn't do anything to educate them.
Honestly, shouldn't it just be about helping people? Listen to this. 33% of men and 43% of women have no life insurance at all. That doesn't even count the people that don't have enough.
Insurance has the power to change people's lives.
You have got to be sure that you educate yourself before you make major decisions. Honestly, I couldn't imagine not being a Safeguard at this point. Hey guys, welcome back. It is episode 5 of Outnumbered the podcast. I am Matt McKay.
And I'm Stephanie.
And we are back. We are almost a month old now in our podcast life age. Yeah. And we're fired up. We're getting right into the meat of our busiest season. But we want to, first of all, cover today the subject of life insurance. It's actually Life Insurance Awareness Month in September, and we thought, we probably should have some kind of life insurance episode in the month of Life Insurance Awareness Month. So that's what we're going to do today. We're talking about the hidden value of life insurance.
Yeah.
So, like I said, it's Life Insurance Awareness Month. If you don't have life insurance, you probably need it. We'll go over that, but honestly, if you have none, look at it. Come on, don't be messing around.
Seriously.
It's extremely important, and too many things happen in this world that could be resolved by taking care of some of your issues. Yeah. Tons of people don't have life insurance, and they could easily get it for pennies a day.
Yep.
So, anyway, our Safeguard scoop for the day is major health insurance news about WellCare / Centene / Allwell / HealthNet / Fidelis Care / Trillium Advantage / Ohana / Texan Plus.
Those are all subsidiaries of Centene.
Yeah, Centene is the mother company or whatever. A lot of people may know it as WellCare, but all those different names are under that umbrella. So I was being a little silly, but it's one company that owns a bunch of different companies. Anyway, they may be bought out by Humana. There were rumors that there was an airplane at Centene's headquarters in St. Louis or something like
St.
that.
Louis, yeah.
And Humana's out of Louisville and whatever. So anyway, crossing our fingers that goes through because it might get better from an agent perspective anyway. But yeah, big news. A few years ago, Aetna almost bought Humana actually, and it was blocked.
Yeah, that fell through,
by the government, right? Because of
Department
antitrust,
yeah.
all that. So anyway, could affect a lot of people watching, so we just wanted to be sure that you were aware that could happen. Mm-hmm. If something happens and your stuff gets bought out, it happens all the time. Don't panic. But it is major news, and it could affect a whole lot of people.
Yeah.
And hopefully would be of assistance to the insurance industry.
Yes.
We'll see. There's a lot of integration right now in the insurance world.
Yeah.
The other, I think, obvious subject that's been going on the last week and a half or so is Gabby Petito. She's a social media, not quite icon or anything, but she's a well-known social media presence, personality. Her and her fiance were both big on YouTube, and their job is to be YouTubers. So they will go around and tell stuff about their lives. So unfortunately, it seems like basically they've pretty much confirmed that her body has been found, and he likely was involved, and he likely has fled the country or something
He's in hiding.
He's in hiding
At the current moment.
at the current moment of recording this. There may be news that comes out in the next little bit, but it's just an unfortunate situation. It's big news, and just kind of sad, really sad.
Absolutely.
And it just, I don't know. We just wanted to mention it. It's horrible for both of their families.
Absolutely.
And also it brings up the subject of abuse, and quick decisions, and the value of human life.
Yeah.
A lot of times we just miss things because I don't want to sound like a 90-year-old man here, because you play video games and you get 15 lives and all that. But we just kind of dismiss lives. We take it for granted,
And she was 22 years old.
Yeah, it's awful.
Just getting started in life,
Yeah, and I don't know. I mean, I don't know what kind of person she was or whatever, but it's just a sad story, and we wanted to bring it. First of all, bring it up because it brings up the point of take care of yourselves. Don't be afraid to report major crimes. Don't be afraid to be honest to the police, because they had a chance. Either she or him or both had a chance to possibly fix that situation by either bringing charges or being honest about the situation, or whatever. And now, he likely, that's not proven until he either admits guilt, or it goes to court. So allegedly he took her life, but what's the point I was trying to make there? But anyway, it's just a sad story. Take care of yourselves. Don't be afraid. I know it takes big guts, or a lot of guts, to report something like that, whether it's sexual abuse or domestic violence or whatever. It always feels like a huge risk, but there's also even more risk on the back end of not doing something about it.
I'd like to update last week's Safeguard Scoop on the case out of South Carolina.
Oh, yeah, go ahead.
So the gentleman, the lawyer, who was trying to commit the insurance fraud scheme. This is just a small fact.
No, go ahead. I don't know anything about it
so
after we talked about it.
The guy that was arrested for attempting to kill the lawyer was actually the lawyer's biggest opioid supplier. He was his drug dealer.
Wow.
And the lawyer had just recently stepped down as the executioner of his son's estate right before all of this happened. So that was just another layer of what is going on in this scheme,
Wow.
To find out that he was actually the one dealing the drugs that this guy got addicted to, that possibly made his life completely unravel.
Wow.
And
that actually makes more sense, though, because the backstory behind who the guy was that he was some kind of
the connection was a
client
speeding
from
ticket.
2013 or something.
Yeah.
So how are these guys so connected that he would trust him to kill him? Well, actually kill him.
Yeah.
So anyway, we'll keep you updated if there's any major updates on any of our Safeguard scoops.
Yeah.
So kind of getting into the subject of today, we're talking about the hidden value of life insurance, and that can be many things to many people. First thing we want to do is I want to be sure that anybody watching or listening, first of all, knows some basics about life insurance.
Yes. Gotta have a foundation.
Yeah, first of all, if you want to see the full version of my definition of life insurance, FAQ, Q&A session with me and Stephanie, we have a video on YouTube. It's if you search life insurance Q&A with Matt and Stephanie, or search Safeguard Insurance, or give us a subscription, then you should be able to see all the videos. But it's one of our first videos that we ever made, and anyway, it gives my synopsis of how life insurance works. But basic life insurance. I like to say there are 3 kinds of life insurance, and a lot of agents and advisors will say there are 2, but I like to say there's 3. The first one is term life insurance. A lot of people have heard of that. A lot of people have it because it's cheap usually, or cheaper. Term life insurance is kind of how it sounds. It lasts for a certain amount of time. So if you have a 10-year term, a 20-year term, a 30-year term, 7-year renewable term, whatever that year term length is, that's how long your rate is locked in. If you have an annual renewable term, or ART, that means every single year your rate goes up because they're insuring you for that year.
Yeah, so they're looking at your age. If you have one, they're looking at your age every single year.
Yeah, well, most people have an age.
Well, I was talking about this policy, Matthew.
Okay, all right, I'm sorry. Yeah, no, I'm just messing. If people have an annual renewable term,
Correct.
is probably what you were going for there.
Correct.
Everyone has an age. Fun fact of the day.
Yes.
I'm just messing. But anyway, different kinds of term for different purposes. But anyway, a term lasts for a certain amount of time. The longer the term lasts, probably the more that you're going to pay by each company. On the other end of the spectrum would be whole life insurance, aka it kind of like it sounds. It's designed to last for your whole life or your reasonable length of life.
Yeah.
So they're at least going to be guaranteed to last until 95, if not 121.
Yeah. Most companies are going for 120 or 121 now.
Right.
Because life expectancy is one.
Right, because now, in the 60s and 70s, it was almost impossible for someone to live to 95. There were so many, there were so few exceptions,
Yeah.
that it didn't make sense to write anything past 95. Now people are living into their hundreds. If you're in your 60s, you're potentially 25% likely to make it to 90, right? And a little bit less to make it to 95, but you have a realistic chance of making it that far.
Yeah.
It's crazy how long people can live because of all the technology. Anyway, whole life is designed to last your whole life. You pay the premium and you know it's going to be there.
Yeah.
Okay? Now, the reason that I say there's a third kind is I used to work for Transamerica, but every company had these types of policies. And I think it's extremely important to bring it up because you may have this type of policy and you need to immediately look at it if you're not aware of how it works. And that's called universal life, or it might be labeled, quote, flexible premium adjustable life insurance. If you have one of those, they're not the devil, but they definitely are in between term and whole life. Meaning they're designed to be a permanent insurance, but if there's not enough premium put in,
you have to fund it properly.
Yeah, it has to be funded properly. It's based on something besides just paying your premium. It has cash value, just like whole life has cash value. It's designed much more to have significant cash value. However, some of the old ones were designed with only interest rates, and anybody that knows anything about interest rates, what have they done? They went way down. Sorry, I'm not even on camera with my phone there, but they went way down. Been under, well under 1 or 2 forever, for 20 plus years now, pushing into 25 even. So late 90s and early 2000s just really ruined interest rates. And so if your policy was only based on interest rates, you may have a significant issue with your life insurance if you haven't overfunded it.
So let me explain that in a little simpler terms, if that's okay.
Okay.
So basically, agents projected out these policies performing a certain way, and the policies have underperformed. These older model policies have underperformed what they were supposed to do. So if you didn't put in extra money, you could have a policy that doesn't have enough funding in it.
Yeah, they were not designed to run at the minimum interest, and what's happened is they've run at minimum interest for over 20 years, and so you run into issues where somebody has a universal life, and it basically the policy tends to run out if they pay what they were told to pay. Sadly, a lot of times people still run out of cash value in their 60s and 70s.
Yeah.
And sometimes even if it's perfectly played, it still runs out of money in maybe the late 70s or early 80s. So you really want to pay attention to that kind of life insurance.
Yeah.
If you don't specifically know, and a lot of people think they know, and I ask them, do you know what kind of life insurance? Oh, it's whole life.
Yeah.
Uh-huh.
No,
Okay.
that's not whole life, guys.
Okay, yeah. Do you get a statement every year with a bunch of numbers on it that look like some kind of foreign language? Oh, yeah. Okay, well, then that might be universal life, so let's look at it. Anyway, you definitely want to, I really want to be sure that you know that. But that's kind of a basic idea. Now, getting into life insurance in terms of what it can be used for, there are so many different reasons to have life insurance.
Yeah.
A lot of people think of death benefit.
Yeah, that's all people know it for in
Right,
a lot of
like
cases.
just getting married. Oh, and you say something about, somebody's got a retirement, and you say something about life insurance, and they're like, oh, I'm pretty sure I can be married. Just take out the money out of my retirement, and it's fine. Oh, okay, fine. But even if you have, $200,000 into your retirement and you die at that point, okay, you're still the people that are going to get your money, whether it's your wife or whether it's your kids or grandkids or whoever, they're still going to have to take out $10,000 to $15,000, $20,000 to pay for your final expenses. So if you set aside even that amount in life insurance, that's taken care of, and it doesn't come out of their pocket.
Yeah.
But also life insurance can be used, this is a very common, most people know that they can be used for this, is for debt, especially a mortgage. Okay, you got a $500,000 mortgage, you get a $500,000 life insurance. You got a $150,000 mortgage, you get $150,000 or maybe $250,000 life insurance.
Yeah.
A lot of people have $1 million because it sounds like a lot, and they got $1 million because they could.
And they think if, somebody passed away, if they get $1 million, say, from the loss of a spouse, that they're going to be rich their entire lives. And they don't realize that that $1 million is not going to be enough over the duration of that life.
If your household income is $100,000 and you have $1 million policy in 10 years, that's, you've run out of that money that you were trying to account for.
Yeah.
So it's really, when you get that $1 million and you live like you were at that $100,000 budget pace, you run out of that money that you just had in 10 years. So you better have another plan or have more coverage, because you can run out, and then you have to figure out, okay, hopefully you're making more money, or hopefully you prepared and you invested some of that money or something. So then there's lots of ways to do that, but you really don't want to just live, like we would say in Kentucky, high on the hog.
Okay. I've never heard anybody say that.
That's more like Arkansas and Mississippi.
Never heard that in my life.
You've never heard living high on the hog?
No, I have not.
Are you serious?
I'm serious. No, I've never heard that.
You need to get out more. Living high on the hog. You've never heard that?
I have never heard that. No.
Living high on the hog. Look it up. So anyway, you want to have a plan. Okay, there are many different purposes. You can set aside for education. You can set aside to be sure your kids are taken care of for the next 20 years if you die. That kind of thing. So obviously if you die, but also it can be used for other purposes as well. And now we're kind of getting more into strategies and other ways that you can use life insurance besides just if I die I get money, or not you but your beneficiary. Um, and you okay?
Yeah.
All right. So anyway, a couple little facts. Term policies. And this is something that maybe you know, maybe you don't. But depending on what data you look at, between 1 and 3% of term policies actually pay out. Okay? In general, whether it's permanent or not, 90% of individual life insurance pays out. Okay? And a lot of the insurance money is on seniors. Okay, $3 trillion in life insurance death benefit is owned by seniors. $140 billion lapse every year on those seniors.
Yeah.
Okay, so a lot of coverage, but it lapses quite often. So first of all, if you just buy life insurance and it just goes along, maybe it works out, maybe it doesn't. But that is not a great plan.
No, that's not strategic.
You want to consult with somebody. You want to be sure things are updated. You want to check your beneficiaries. Because well, I've seen some situations where people didn't pay attention to little things like that. And they either just lapsed the policy and somebody died, or somebody's got a beneficiary on a policy, or whatever, that they didn't want to get the proceeds, like a divorced ex-wife that actually really needed it, but she got $75,000 that was about to lapse, actually, because the guy had been dead for 3 years. For example, one of my people. So she made it out fine, but I don't know if that was his intention.
Yeah.
And so it could have gone to someone else if that wasn't his desire. But such is life. It ended up working out for her, so I was happy for her. But sometimes we have intentions and reasons for doing things, and those intentions and needs and reasons change.
Yeah, absolutely.
So the point of saying some of those statistics is not don't buy life insurance. It's much more take care of what you have. The reason that some things don't pay out is because people don't pay attention, or you don't value what you have, or you don't pay attention, or you make a decision in the short term that changes your long term.
People will take out policies and pay on them for years and years, and then lapse the policies, and depending on the policy type, have little to no financial benefit for them for doing that. So if you're considering lapsing or surrendering a policy, you really need to sit down with somebody and make sure that that's a strategic move, because all that money you've been putting into that policy this whole time could be lost, and it could have been for nothing. That's not a wise way to spend your money. So you definitely want to have life insurance to insure your life, and to, if something were to happen to you, make sure that everything is handled and taken care of. But you don't want to funnel money into something and then just let it go because you're not paying attention and you're not taking care of things, and then you've put all this money into something for nothing. So the point is you need to use it strategically, check on it. I would recommend annually. I would say look at it every single year. Your life could change. You have different needs as you go through different life changes, like getting married, having children, possibly getting divorced, going to college, whatever, certain ages, you have different life changes as you go through life. So a policy that you took out when you were in college might not meet the need for you when you're 43 years old and married and have 3 kids. It's a difference in several years there that could change what you need that money for. So it's important to evaluate and make sure it's still meeting your needs and all of that. So just be wise with what you're spending your money on and how you're taking care of it.
Really good stuff. And like we talked about life changes, marriage, graduation, kids getting older, people coming off of health insurance, people that are retiring, people that are now disabled, all kinds of life changes. Obviously, someone in the family dies, divorce. There's all kinds of life changes that happen as we go through. Buy a new house, whatever. All kinds of examples that completely change your debt position, that change your perspective in life. As you get older, generally you're going to get more conservative in terms of how you look at the world, in terms of how you spend your money, in terms of, well, I just had this health scare, now I'm actually worried about something. And so if you can get a hold of things while you're as young as you are now, whether that's, you're 18 and you like to listen to podcasts, or you're 73 and you have no idea how you're going to make things work the rest of your life, or older, whatever, or younger, or in the middle. You want to get things started now and having a strategy and having something that makes sense. And so we strongly suggest getting with someone and talking about these strategies.
Yeah.
Speaking of which, there are a lot of different strategies in life insurance that you can use. A lot of people don't know about them. And so we want to focus on how you can do certain things and how life insurance can do certain things that you may not even know. Kind of the last third or half of the episode or so. We want to talk about those opportunities, some strategies on retirement planning, all kinds of things like that.
Yeah.
Were you gonna?
Yeah, sure.
Okay.
So one of the benefits of, say, like a whole life, and even universal life, is that they, like you mentioned, they build cash value. So what is the benefit of that? Well, it can help you find financial stability over time. You can build up a reserve of tax-free, as it sounds, cash inside of your life insurance policy. And that money can be borrowed on if at some point you need it. I would say our official stance would be, don't borrow off of your cash value life insurance unless you have funded your policy well enough that it will not die or lapse without that cash value, because cash value does help the policy. It covers the cost of the policy if you're not paying enough premium wise over time.
Or the only caveat I would say to that is, if you're going to run the cash value out of your life insurance, if that was the plan the whole time.
Yeah.
Because you can invest in certain vehicles that you say, okay, we're going to pull out $88,000 a year out of this cash value.
Yes.
You're going to run out in 10 years.
Yeah.
If that's your plan, fine. If not,
what I'm saying is, don't take a loan out of your cash value to, just pay something else off if your cash value life insurance policy is going to lapse because of that decision. So make sure, if you decide to do that you're doing so wisely, and that get some planning assistance from an agent or a broker or something like that can make sure that is a wise decision.
yeah.
But basically, as he was just mentioning, if it's a strategy that you're employing, it can be used wisely to draw an income off of your cash value, as long as that is how it was designed, as long as you built up enough cash reserves to do that, and also potentially preserve your life insurance if that's the intention. But one of the things is like, sequence of returns when you're retiring is very, very crucial. Because if you retire during a down market and you draw off of your retirement during that time, it can be devastating to your portfolio. It's actually more important than the average of returns that you're getting.
Yeah. Let me just clarify what sequence of returns is. So let's say you've got $200,000 in your retirement. Okay, pretty decent amount. A lot of people don't have that much. Some people have more, whatever. But just say it's $200,000 for an even-ish number. Okay, and so you sit down with your planner and you decide, okay, we're going to take out, 4% a year, which would be that would be $8,000. Okay, and then you got Social Security, you've got some other funds and stuff like that. Okay, well, let's say as you're making that decision, your retirement completely bottoms out. 2008 happens, and it's now 100,000, or it's 120, or 140, or something like that. You've now gone from taking out 4% to, if it went down to 100,000, 8% of your
Yeah.
money, which means that you definitely will run out
You're
of
gonna
that
run out of
money
money.
in your lifetime. And you're now going to have to get interest on 100,000 instead of 200,000. So you really are going to be even more behind than you might think.
Yeah.
So that's sequence
So-
of returns.
So the way
You do
that
not want
you
that to happen early in retirement. Sorry.
So the way that you would use your cash value life insurance policy to help in that situation is you can draw an income stream out of the cash value in your policy instead of drawing income out of your investments in those early years of your retirement if there happened to be a down market at the time. So you can either minimize the amount of money you're having to take out of your retirement account, or possibly entirely draw an income stream off of that cash value for several years while the market rebounds, so that you're not devastating your assets for your future growth. So in that manner, you're preserving your potential future gains as well as your principal in your investment account. So that's one strategy that people probably, most people are not going to know or even think, like, let me draw off my cash value for several years so I'm not drawing off of my assets when I'm going to be draining those accounts out early.
So, let's talk about, I don't know what direction you were going, but let's talk about how you set that up so that you have the cash value, kind of start from the beginning. Let's say you, first of all, everybody can use some kind of life insurance. I always make this argument. If you don't have enough in your savings account to pay for a funeral or pay for your debts, then you need life insurance to cover
Absolutely.
if something happens.
Absolutely.
If you have more money, let's say you have savings and you have retirement, you want to have something that prepares you for if you run out of money at the end of your life. If you have tons of money and you might possibly be getting into the large estate category where you might have to pay huge estate taxes, where you're getting into the tens of millions of dollars, depending on state laws and if they change things again and whatever. But I think it's like 11 million. If you get into estates larger than that, then it might be to your advantage to put more money into life insurance. Also, if let's say that you don't have much debt and you're trying to figure out how you can invest more into your retirement, and you've maximized your 401k and you've put stuff into your IRAs and all that, and you've put stuff into a Roth, or you can't do a Roth because you make too much, you can put your money in premium into a life insurance and overfund the policy, and then later you'll have the option of that retirement income that we've been talking about. There is no limit on life insurance as long as you follow certain rules within the life insurance of how much premium you could put in. As long as you can get approved by the company and you can pay the premium, then you can put in $200,000 a year, or say for average Joe, maybe you want to put in an extra $5,000 or $10,000 over your IRA limit or whatever. Say you're in your 40s to 50s and you finally paid off your debt, and now you've got, say you make $75,000, you've got an extra $20,000 a year that you could do something with to help boost your retirement. So you take that $20,000, you put it into life insurance. Now you've got an extra bucket that comes out way more tax advantage. It functions more like a bond when it comes out, completely tax free, and the entire time that's sitting there growing, you've got a death benefit of a significant amount, and as you pull it out, hopefully you've put it in something that's going to turn a profit that you versus the premium that you put in versus what you can get out.
Yeah.
So,
So
a little financial planning tip
Yeah.
there.
So let's talk a little bit about some of the features that can be included in different types of policies. And this can depend on whether you have a term, whether you have a universal life, a guaranteed universal life, or whole life, or whatever. Even final expense has some built-in benefits that some people might not know of. So one of them that could come on a term policy primarily would be a convertible policy rider, or however you want to call it, but
Conversion option.
conversion
in a term
option. There you go. Yeah.
Policy.
So basically, what that means is you can purchase a term policy for, as you mentioned earlier, lesser of a premium, and then as you go through life changes, or possibly you buy a term when you're very young, and you're going to start making more as you get older or something, you can convert that policy into a whole life policy, and then you would pay the whole life policies at a later time. So you start out in a term and you end up in a whole life, and it's not, you just have to purchase a whole life right off the bat. So that's one option that people could utilize to get where they're trying to go.
And I'll say almost every term policy is convertible to something. It may
Yeah.
not have very good options,
Yeah.
but almost every single one of them can be. There are, I'd say, less than 15% for sure of terms have zero conversion option, but there are some. So if
Yeah.
you look into a term and it has no conversion option, you have health issues, that can be unfortunate. So
Yeah.
you want to really
Yeah.
consider, what if I want to convert it later? Because some of them can't, and some of them don't have great options within that.
So another thing that life insurance policies can possibly have included, and this depends on the company, it depends on the policy that you take out. No two policies are identical as far as company to company. So what one company offers, another one might offer a variation of the same thing, but it might not be identical.
It's
Okay.
certainly not going to be the same rate.
Yeah. So check around and make sure that you're getting what you actually need. But some products can have a waiver of premium rider on it. What that means is if you were to become disabled for some reason, that they can waive the premiums while you're disabled. If you're disabled for the rest of your life, then it could potentially pay your insurance premiums for the rest of your life. And then you have a policy in place.
Yeah.
And it's just basically designed, it does cost an additional premium because you are adding a rider to a base policy. So it does cost more. But it can be a good asset to basically anybody in a lot of cases, because if something were to happen, even say like a car accident or something, that leaves you disabled for any reason, then you're able to get those premiums paid, and you're no longer having to worry about that premium coming out of your bank account.
Yeah, I mean, let me ask y'all at home or those listening, if you could pay, if you had the option to pay about 10% more to cover if you have a disability, when you have a good 1/3 chance of having some kind of disability at some point in your life. And a lot of people end up totally disabled. If you look at the amount of people that draw disability,
Social
it's a
Security
massive,
disability.
or even partial disability or whatever.
Yeah.
It's massive. And it's a significant threat. Well, the waiver, quote unquote, of premium is basically you don't have to pay that anymore, or you don't have to pay it for the amount of time that you're disabled.
Yeah.
So number one, it saves you in a moment when you don't have any money, but also it gives you life insurance at the end of the road. So if you have a $1 million term that you're paying, $50 a month for, and you get disabled, a lot of companies will either pay the term forever, or they'll actually convert it to whole life or universal life, and they will pay the premiums and give you cash value on that policy.
Yeah.
So it's a really powerful tool that a lot of people look at it and say, it looks like it adds more expense. I don't know if I want it. Well, if you saw the guy that I had in the local guy when I was with my former company, he had a stroke at 29 or something like that. He was in his 20s. And I was talking to him, and he was in his 40s now, and they've had this devastating issue. He had waiver of premium on his policy for almost, I think it was over 20 years before we actually filed the claim for disability, and they got a huge check back from having overpaid premiums for forever. And now his life insurance is taken care of instead of this poor mama that's in her 70s dealing with sick kids that is struggling selling off pieces of property trying to pay all their bills. So if you look at your policy and you have a little WP on there, that's waiver of premium, or premium waiver, PW, or something like that. You want to pay attention to it, especially if you've had disability.
Another benefit that some people might not know could be available, or a rider, would be a child or a grandchild rider. That's just simply where you can insure your child or your grandchild on your policy. That can be beneficial in some cases, especially if there's a case where a child or a grandchild could be uninsurable for some reason. But there's a couple more that we'll go over. You can add on some policies a long-term care rider.
Yeah, that's huge.
That could be absolutely massive, especially for somebody who cannot get a traditional long-term care policy. And basically, if you have this type of policy, if you can't, depending on what company, they might have different guidelines, but generally, if you can't complete 2 of your 6 activities of daily living, which would be like bathing, toileting, eating, that sort of thing as defined by the doctor, then you could have part of your death benefit paid out towards long-term care needs. It's a huge benefit. Do you have anything to add to that?
Yeah, absolutely. Long-term care rider is something that I'm pretty passionate about. I've run into, first of all, some scenarios where I had a funeral home director. I can't say what town he lives in because everyone would know who he was, be able to Google him. But anyway, he had looked into long-term care, and he wasn't able to get it. He's a big, tall guy, and he basically standalone long-term care policies were not going to cover him at all, but a particular company would cover him and possibly give him some long-term care coverage. So one thing is using that long-term care can help somebody that may not have been able to get it otherwise. Also, if you have really any kind of assets, or you have anyone ever in your life that's been in a nursing home and you feel like they were mistreated, bed sores, all those horror stories, Alzheimer's, where somebody's stuck forever in a nursing facility, or they need some kind of serious 24-hour care at home. Long-term care rider on a life insurance can absolutely save your bacon. It can save your assets. It can pay massive dividends down the road if you have used that as part of your planning. And you're, not to name names or anything, but your Edward Jones, your Raymond James, Fisher, whoever. A lot of times they're going to tell you to take care of it with assets. But if you take care of your long-term care with either some kind of long-term care policy standalone, which I know we're talking about life insurance, but if you do some kind of long-term care standalone, or you do life insurance with long-term care, it can be a powerful, multi-dimensional tool that is not, is way more versatile than just trying to set it up by taking care of it with your assets. And also your assets, if you keep it in the market or something, can be completely touched by a nursing home.
A lot of assets managers, like we mentioned, that they're truly, in the market looking at strictly assets and nothing more, can kind of miss the boat a little bit when it comes to healthcare needs. And I would consider long-term care in that healthcare needs, but Medicare and that they don't specialize in that, so they just think the money will cover it, and they don't realize
They're
Every-
great at growing your wealth,
Mm-hmm.
but they're not always. Sometimes they're really good at it, but they generally, especially if they only are financial advisors and they only work with growing your money, they're not as good at distributing your money and making sure that it's going to last. They'll tell you, okay, we're going to pull out X amount because that's what you need to live on.
Yeah.
Okay, what if you live past your life expectancy? Because they're going to say, okay, how long are you thinking you're going to live? Okay, 85. All right, here's how much you can pull out.
Yeah.
We'll try to make it work as best we can. But hey, if it goes down at the wrong time or something, you might run out. But it'll be all right. Yeah. We'll figure that out later.
That's the purpose of insurance. Is it's to mitigate risk, and that's what some strictly financial planners, advisors, money managers, however you want to phrase it. That's sometimes they can miss that part of the puzzle, and they can completely crumble an entire portfolio because they're missing a huge piece.
I tell this story a lot. I had a lady that was it was from another agent that had left the company, and anyway, I came into this situation and they were trying to get insurance written, and she's telling me about her mom, and she says, Mom had over $1 million in her retirement, and she's gone and she's moved into this nice nursing facility, and we thought, gosh, there's no way she's going to run out. And we would take her out to Longhorn, and we'd take her out and feed her, and we went on vacations and all that, and we're almost out. And it was over $1 million when she started her long-term care, and they probably had a couple $100,000 left, and she was healthy.
Yeah.
And obviously she had Alzheimer's and dementia issues, but she was probably going to live.
Healthy, yeah.
And the lady says, I really wish that we had taken care of this and put aside more to make sure that we were taken care of. That's the problem with living on your assets. That's the problem with sitting there saying, I got $2 million. I got $2 million. I'm rich.
Yeah.
Okay, well, let me tell you, $8,000 to $10,000 a month eats up a lot of money real quick, and also feeling like you've got all the money in the world.
Your $1 million.
You can find a way to burn it.
Your $1 million that you don't have a good plan and strategy for is not going to go as far as somebody's $250,000 when they've got a killer strategy in place to maximize that money. If you just have $1 million and you just blow it on everything under the sun, and you have no plan or strategy, and you just go out and buy new cars and boats and everything else, and you think you're loaded, is not going to do as much for you as somebody who properly plans, even if they don't have a fraction as much money.
And to the point of the focus of this episode, if you're going to go buy a Corvette, or you're going to go buy an investment property or whatever, if you take it out of your cash value of your life insurance, you're not going to pay as much in taxes, or any in taxes, if you've set it up properly.
Yeah.
Versus pulling out of your retirement.
I hadn't thought of that, but that's a good strategy too.
Okay. We would talk to at another place that I was working at. We would talk to real estate agents, and we would say, "Hey, you're looking to do investment properties. Okay, put this money in this life insurance, and if you need the cash value out in order to make a major purchase without paying tons of taxes out of retirement, without taking stuff out before you're 59 and a half." Take this money out of the cash value, and you can purchase a property or a car or whatever, and you would save tons of money. If you pull out and you buy a $300,000 house out of your retirement when you quit, okay, you're going to pay on your income for that year of $300,000 versus plus whatever the rest of your income is. So you're going to function like you're a $400,000 a year income. If you take that $300,000 straight out of your life insurance, you potentially could pay some taxes if you have gained more than what you put in, but you would only pay taxes on that. Or if you do it properly, there's ways that you could take out a loan over the top of that and end up paying 1 or 2% on that money instead of 35 to 50 or more, depending on current tax rates.
Yeah.
So, sorry, hit a little nerve, or not a nerve, but hit a little button there that made me think, this is definitely something we need to mention.
Yeah. So another benefit that could be included is a critical illness benefit. There's accelerated benefits in the case of, if you're diagnosed with a terminal or critical illness. So there are a lot of features and add-ins that can be looked at with a life insurance policy. So that's why we're calling this episode the hidden value of life insurance, because not everybody even knows that you can get more than just a standard term and that's it. There's so much you can do with life insurance if you just learn how to leverage it. It can be a huge, huge benefit to your financial portfolio. And the great thing about life insurance is you don't have to have billions of dollars in order to get a life insurance policy. You can be in college and working a part-time job and be able to afford some kind of life insurance policy. So there really is something for everybody in every stage of your life, and it can really set you up well for your future.
Absolutely. And on that note, I think that's a good little end there. Seriously, she's talking about, just so you know the amount that we're talking about that you can get some kind of life insurance, okay? Because ultimately, I honestly don't really care if you go with us, if you go with someone else, but if you don't have life insurance, get it. I mean, I think I could make an argument, at least make an argument, if not stone cold prove that you probably need it.
Yeah.
Just about everybody, whether you're a billionaire or whether you have.
If you're a billionaire,
two
you
pennies.
Definitely need to be leveraging life insurance.
Yeah.
If you're a billionaire, you need life insurance. If you don't,
the number there is 270-946-070. But anyway, I'm just joking, sort of. But anyway, in all seriousness, I can seriously make an argument for anyone to have life insurance. I really mean that. And I really also mean it that it doesn't matter. We'll talk to somebody that has 2 pennies, and we'll talk to somebody that has, everything in the world. But we're talking seriously. You can get some kind of coverage if you're under, I don't know, 50. You could probably get it for $10 a month, $15. You can get stuff on kids for single digit dollars a month, and sometimes on kids that are unhealthy. When you're older, you can still get it. Okay, so don't give up. Keep looking for that life insurance. It's not that much to get something. It's better than nothing.
Yeah.
And if you're in the position that you can do more, I would encourage you to get a strategy and use it as leverage for your future.
And I'm just going to add this as kind of a side note. This is not the point of our podcast today, but just, something that's important is don't put off getting your life insurance. Don't think, I'll get it next year, or I'll wait until I have XYZ in place first, or I'll get it when I'm older. I don't need it right now. It's get it now. You need to get it now. Something can happen to you. Something can happen to your loved one unexpectedly. You could have a health concern come up that might make it harder for you, or in some cases impossible to get life insurance depending on certain scenarios. Just don't procrastinate. That's the biggest thing with life insurance is people procrastinate, and then some people regret it, and I don't want you to be that person. So get life insurance.
And that perfectly leads into our wise words of the day. And this is from LIMRA, LIMRA, Life Insurance Marketing and Research Association. A lot of people in the industry would recognize that, but really good organization that has a lot of information on life insurance. But it was a tweet that I saw actually. But anyway, did you know 4 in 10 consumers cite not being approached about life insurance as a reason why they haven't purchased yet? Okay, So 4 out of 10 of you that don't have life insurance that are listening to this are saying that you haven't done it because you haven't been approached about it.
Consider yourself approached.
Here we are. I mean, seriously, you've got us. I promise you, if you don't want to work with us, I'll find you someone that's pretty local that can talk to you, or somebody that you know that really has an expertise in certain areas or something like that. I promise you, you give us a call, we can help you either get it or find somebody that if you say, I want somebody local to Gilbert, Arizona or something. Okay, fine. You know, I'd rather you get the coverage than me try to quibble about why you're not doing it with me. But don't let that be an excuse, okay? Yeah. Seriously, that's almost half of the people that don't have life insurance saying, well, I don't have it because nobody asked. Well, if you think about why you possibly need it, there's no question that you need to look at it and do it, okay? It's not because that's what we do. It's not because we want to make money off of you. It's because we're very passionate about what we do, and we've had circumstances in our lives that, whether it's helping clients or our own personal lives, where we needed life insurance and we wish we would have had it. Yeah. So, please, as we wrap up today, get your life insurance. I know we took a little longer than we normally do, but this is something that I'm very passionate about. Yeah. Something that Stephanie's extremely passionate about, and we really care about it, and we care about you, and we want to be sure that we got some points across to you, whether you do it with us or whether you do it with someone else. Go do it.
Why don't we make next week's episode kind of my story and our story of how we, our life and how.
Wow. Okay. I was asking you before we did the episode if we wanted to do that in this episode, but if you want to do a separate episode, yeah, I think it'll bring a lot of practicality to life insurance.
So tune in next week, and I will explain my life story and why it's important not to wait to get life insurance, and hopefully some of you will connect and make an important decision based off of experience.
Do not miss it. I'm telling you, do not miss that episode. It's a powerful testimony of both tragedy and triumph. And so we want to invite you back next week for episode 6. It'll be the start of October. And we really want to invite you back for next week. I think it's going to be a good episode that you really need to listen to. As always, please follow us, subscribe, like, all that kind of stuff on social media. Check us out. Comment, hey, I think these people are great. And also, if you need assistance in anything, we seriously do. Life, health, and retirement. We have partners that we can do virtually anything. We have referral partners. We don't do property and casualty, aka car and boat and home insurance, but we have people that can, and we have people in every state that we can find to help you. So please let us know if you need assistance in any way. We'd be happy to help you. The number is 270-904-6070, www.safeguardky.com. Check us out at Safeguard Insurance, at Safeguard Insurance KY, or Safeguard
at Safeguard KYINS. Just search for Safeguard Insurance and just search it.
But we love y'all. God bless you. Thank you for hanging on for about an hour.
Yeah.
But we had a lot to say. We're very passionate about it. God bless and take care.
We'll see you next week.
All right. Bye.